Hey traders, welcome back to the channel. In this video, we're going to talk about context logic, ticker symbol WISH. Now, it was a very eventful week for the stock. As you guys all know, earnings came out on Thursday. They were very disappointing. And as a result, we had a huge drop off on Friday. However, as a result of this drop off, I think right now we are sitting at a perfect opportunity to get into a growing company at a really discounted price. And in this video, I'm going to go over one metric that I'm looking at that tells me that Wish is extremely undervalued at these current levels, despite what happened with earnings. I'm going to break that down for you guys. And then after that, we're going to take a look at the charts as always. I'm going to go over key metrics and key indicators so we know how to best play this stock moving forward. Without any further ado, leave a thumbs up on the video. Please subscribe to the channel. It helps me out tremendously. And let's get started. Okay, so here's the news that set Wish into free fall on Thursday afternoon into Friday. At some points during the day on Friday, it was down over 30%, closing down around 20%. And we see that it's because of a very poor earnings report. We saw a huge miss on the revenue side, 656 million, which is a 6% loss year over year, as well as a huge miss on what was their projected earnings. And on top of that, they also had some disappointing metrics when it comes to net income and also user retention. So that's all not good. Obviously, it's not what you want to see. However, at the same time, it's not the end of the world. This is a bad earnings, but it's not saying that the company is about to go bankrupt. Of course, there was going to be a drop off year over year when it comes to earnings, because think about where we were in Q2 of last year. From April to June last year, the world was shut down. Everybody was shopping online, and thus Wish obviously got a boost as an e-commerce marketplace. And now it's tailed off a little bit. However, 656 million in a quarter is still a good number to be at, especially when we keep in mind now that, the current stock price and the current market cap compared to this revenue, it just doesn't make a lot of sense. And I'm talking about the price to sales ratio, the PS ratio. And essentially, in order to explain it, we're rationalizing and comparing the revenue numbers to the stock price right now. The market cap sits at 4.7 billion. And meanwhile, if you extrapolate $676 million among 4 months, that's about $2.5 billion annually. So as you guys can see, that's a price to sales ratio of less than 2, which is very low when we compare it to some of Wish's top competitors. So we're just going to pull up some historical charts, take a look at what Wish is competing with. Amazon currently trades at a price to sales ratio of 3.81. Alibaba currently trades at a price to sales ratio of 4.45. And this one is mind-blowing. Shopify, which has had a huge year over the last year, is now trading at a price-to-sales ratio of 48.86. Meanwhile, Wish, with that big price drop-off, has gotten their PS ratio all the way down to 1.712. It's under 2. This is very small for a tech growth company like Wish, with such a promising future. And as a result, I believe that the current stock price is very undervalued, currently sitting at 755. So let's hop into this chart. As you guys can see, Friday came with that huge drop off, opening up down 30% and then made a pretty nice move throughout the day. A lot of people clearly interested in buying the company at such low stock prices. And we'll ultimately see whether there is more downside here or whether they made the right move by hopping in early and they're going to be rewarded. But taking a look at the chart, there's really not much to discuss when it comes to indicators. Taking a look at the moving averages, for example, they're all the way up here. Okay, we have the 9-day EMA at 946, the 21-day at 983, and the 50-day moving average at 1077. Wish is clearly below all those levels after the massive sell-off. Ultimately, that is a bearish indication, meaning that we are currently sitting in bearish territory. However, one positive indicator that we can point out, if we go onto the daily chart, taking a look at the RSI, as you guys can see, we are very oversold on the RSI. Obviously, that comes as a result of the huge sell-off, and we're almost in overextended territory. And normally stocks don't stay in that zone of being overextended on the oversold side for too long. Normally, When this happens, the sellers get exhausted, the buyers step in, and it starts to kind of reverse course. So that is something to keep your eye on, especially if you are long on the stock. That is, at least the one piece of positive news here. Sellers can't sell shares forever. But that being said, let's hop into the key levels heading into next week. Obviously, this is a tricky chart to read. Not a ton of data for Wish down here at these levels. However, I did chart out a few to keep in mind. First one's going to be 753 on the support side. I chose that level because that was the low point that Wish faced prior to the sell-off back in May, when they also had a pretty disappointing earnings back then. So 753 was the low. After that, got a big bounce, and by the time June hit, it was a $15 stock again. So that is a level to keep your eye on. See if more buyers are going to be interested in buying again at these levels. After that, I will say downside to $7. $7 is just a nice whole round psychological number. And below that, 669 was your low point during regular trading hours on Friday. If it does break through, then all of a sudden we are once again at 52-week lows. And as a result, you really don't know how much more downside is ahead. So if you're not just blindly swinging this, if you are playing in and out of it, targeting any of these support zones is a great spot to either open a position or add to your position. And you do know that if it does break this final support here, it's not wise to stay in and try to predict a bottom. You normally would want to have that bottom form naturally, and then that's when you hop in and ride that thing back to the top. However, if we already do have the bottom in here and we start moving to the upside, we do have some resistance levels to keep in mind. So the first one's going to be right here at 786. After that, we have 805, 830, and then 875. And if we can get above 875, then we are going to start probably, making some more pushes to the upside. It's going to start to turn a little bit more bullish for the stock. And then maybe we can even reclaim some of these moving averages and really turn this chart bullish. However, ultimately, we just have to wait and see what this next week brings us. However, like I said, with the PS ratio being this low, I do think that the stock is undervalued at these levels, and there is definitely opportunity here to make a nice chunk on a swing if the bottom is indeed in. But let me know what you think happens next. I'm always interested to hear your guys' feedback. If you have any questions for me, let me know. I'm very happy to answer them. If you like this video, leave a thumbs up. If you want to see more content like this, please subscribe to the channel. And aside from that, have a great rest of your weekend.